Welcome back, traders. I've talked a little bit about some of the taking a step back from trading and focusing a little bit more on being adaptable, right? I'm adapting not only my trading strategy, but actually my indicators. So I wanted to get in the architecture of confluence. That's really what my strategy is all about, is the architecture of confluence, what it means and why it's important in this
Welcome to Many Millions, where we focus on the many reps and the million moments it takes to build a trading career.
high frequency environment that we're in, like NQES, right? Reliance on a single data point is the fastest way to drain an account. If you trade solely based on price action, you fall victim to liquidity sweeps and stop runs. And if you trade solely on indicators, you fall victim to lag. That also includes my own, but I'm explaining why my indicator is a little bit different. The market is a chaotic system. To trade it successfully, we don't need a crystal ball, we need a filter. That is why I built the QRI indicator, the quad rotation indicator. We are not looking for a feeling. We are looking for a mathematical alignment of four distinct market forces that we call confluence. A confluence is the only thing that separates a gambler from their statistical edge. And that's what we want, right? We don't want to be the gambler. We want that statistical edge that just keeps us ahead of the curve. It doesn't even have to be that much. You talk about the casinos in Vegas, they only have a 4 point something percent edge. Let's call it a 4.5% edge. That's not that much, but they know over the long term, that's billions and billions of dollars every year that they make. So let's get into the four strategies of QRI and the strategy in general, right? This isn't just about my indicator, it's about the strategy. For those of you that don't want the indicator, that's fine. I'm still here to teach my strategy, and I want to continue to do that and make as much of my strategy clear on how I think and how I go through the market. So our strategy doesn't ask, is price going up? It asks four specific questions. A trade is only valid if all the answers align, but that's the grading system I'll get into in just a minute. So number one is the lie detector, the RSI divergence. This is first we look for a crack in the trend. We monitor the RSI relative to price. When price pushes to a new high, but the RSI makes a lower high, we have divergence. That is what divergence is, and that is one of the critical pieces or critical conditions that the market has to show me in order for it to be an A setup. This is the market telling a lie. It indicates that the momentum driving the move is fracturing. The QRI scans the last 10 bars to find these hidden disagreements. Number two, we've got the gas tank, the slow stochastic, or the rotation, if you will. This is really where the name of the quad rotation comes from. So in there, we check the fuel. Most traders use fast stochastics, and I do have some fast stochastics on my chart, as you guys know, but they flicker with every tick. The QRI utilizes a slow stochastic array, specifically stocks 3 and 4 on my chart here. Those are length 40 and 60, if you recall. We require these heavy, slow-moving indicators to hit extreme levels, above 78 for shorts or below 22 for longs. When these massive indicators rotate, it's not just noise, it's structural exhaustion. It tells us the rubber band is stretched too far, it's ready to snap. And then number three, we've got the anchor, that is the VWAP. So the volume weighted average price, right? VWAP, it's an institutional anchor. In a mean reversion strategy like I use here, we never buy above value and we never sell below it. The QRI ensures that for a long setup, price is below the VWAP, creating the snapback potential, and this keeps us from chasing extended moves. Now we've got number four, the trigger, right? I always talk about the trigger. What is that trigger? It has to cross over the 9 EMA. That's my final confirmation. A setup is just a theory until price confirms it. We use the 9-period EMA, even if we have divergence, exhaustion, VWAP, we do not enter until price physically closes across that 9 EMA, be it on the 1-minute or the 3-minute chart that I'm about to show you here and have in the background. But this prevents us from catching or trying to catch a falling knife, one of the worst habits you can fall into. It's that FOMO, right? Again, I think all of our bad emotions come back to fear or greed. So this is where the power of the grading system really comes into play. This is where the magic happens. The QRI automatically grades the setups. An A setup means all of these conditions need to be met. A B setup means 2 out of 3 need to be met. Why is this superior to price action? Because price action can be manipulated by a single large order, but it's nearly impossible to manipulate price, momentum, mean reversion, and volatility all simultaneously. When you see a QRI buy signal, you aren't just seeing a green triangle, you're seeing a moment in time where sellers are exhausted, that's the stochastics, right? Momentum has shifted, that's the divergence. Price is undervalued, that's the VWAP. And the trend has officially been broken, that's the 9 EMA. This is not just a guess, it's confluence. And confluence all rolled together is how we win at trading. So with that, I just wanted to show my chart here. I'll shrink myself and get into one of the improvements that I've made to my indicator. I'm looking for A setups, and that's three out of the four really that I need to hit. But one of the things that I've noticed in a lot of these conditions, especially during the government shutdown and even after, with the volatility that's come up with MES, is that we get a lot of it crosses over the 9 EMA, ticks back up, and then goes back down. And so I've worked on a way to get a better indication when that occurs and not to enter at that time. But I wanted to show you this newest version of the indicator. This is really an A plus setup. It's above an A setup. So I still have triangles for an A setup, but my new indicator actually throws a diamond on here. And I've even got a little pretty diamond icon at the top to indicate that this is now hitting all four boxes along with support and resistance zones. So it's really hitting 5. And you can see my resistance zone up here at the 6805 level. We now have that EMA crossing over, and this is again on the 3-minute time frame. This is Thursday, October 9th. And you can see we're a little bit above that VWAP. So as we come down here, and I've got good hooks rolling over from all four stochastics, just coming into the 80-ish, 78 level on this slowest stochastic, stock number 4. But my new rule, and I'm actually building this into the indicator, will say, okay, you have this candle here that came down and crossed below the 9 EMA. Don't take your entry yet. Be patient in your setup, and let's watch for it to tick actually below this. So what we're going to do is wait for it to cross below this 6801.75 before we enter. And I actually am building it in so that whenever I get this diamond pattern, it will tick that off. And even in normal A setup, it will draw a dotted line across here to tell me what level it needs to cross over before I should look for entry. And you can see we now have a really good entry, right? We've got a solid push down. Now this looks like it's definitely the biggest candle of the day. It was only 9 minutes into the New York Open. But if you look over here, price action is actually just barely starting to pick up, right? It moved a bunch compared to the rest of the other candles, but that's not really even that big of a move. So we're going to take our stop just above the wick of that candle. Again, if it breaks the 9 EMA, I want out, and I want out quick. So that's where I'm going to throw that stop loss, maybe a 4-to-1. I'll throw this down here just to kind of get an idea. I think it's going to have that much momentum. I actually don't know. I haven't played this one yet. I'm still doing back testing on this indicator. This is really one of my back tests, and I just kind of wanted to walk you through my process here, what it looks like, and let's see it play out now. What I love about this is now if you're looking at that line right here at the 6801 level, it never touches that again. It never actually pulls against me. You can see we've got a little bit of hesitancy here, but it never crosses the 9 EMA. I'm going to let it carry. And it's got close above the 9 EMA. This one wicked above it, but immediately came back down. Okay, still good movement here. We're getting to oversold levels on the 60 stochastic, and that's what I typically look for an exit. My exit is, again, if it crosses over that 9 EMA. So in this case, I am now, zoom out just a little bit on my volume, I'm seeing it still be bearish and it's carrying through, but I am oversold on all 4 stochastics at a risk of $300. I'm perfectly content with that. I'll let it play for just one more candle here, but I think I want to close this. Oh, and actually that just tapped my $1,400 take profit level. Let's see where this ends up going. It went down just a little bit more. Oh, and there's the wick back up, and you can see my B signal in the opposite direction. So again, just wanted to walk you through my process there, what I'm striving to do with the indicator, and constantly adapt not just the indicator, but my strategy with that new dotted line that I'll be adding in there, saying if I get this diamond signal or an A signal, This is an A plus, right? If I get an A or an A plus signal, I'm immediately not taking that trade just because it crossed over the 9 EMA. I'm waiting until the next candle that crosses below that lower crossover of the 9 EMA. So that's it for today. I'm going to be kicking out hopefully a few more videos in the coming weeks. With the holidays around the corner, I should have more time. And my goal is to strive to always give as much information here as I can, be totally transparent with you. And until the next one, happy trading, y'all.